May pips be upon you. I hope your trading day has gone well today. I want to share with you what I see for the rest of the afternoon. Oh, well, the rest of New York session uh, with the NASDAQ. All right. On the daily, what do I see? I'm looking at price making lower lows, lower highs, lower lows, lower highs. Up to this point, we're breaking structure. After a break of structure, what do we expect? A return to impulse. The impulse being the order block or the supply area that sent price to break that structure. But we didn't get that return to impulse when we broke the structure here. This higher low, which created that higher high, right? When we broke this structure and took the liquidity from this price point below this price point, then we started making our way up. All right, and when you see this pattern here, that this higher low situation, price is probably going to continue up higher, and we went all the way to the impulsing order block. Now I have an order block refined up here, but this is where it came from, right? This was the last up move. Actually, it's the whole thing. That last up move before the down move. All right, this created this supply zone here. All right, this created this order block. An order block is a range of price, not just a bearish engulfer or something. It's the range of price before the breakout. Okay, and I refined it to here once we had this validation here, as price came back to mitigate the order block once, and then price fell. We know that because of the way price fell, the nature of the aggression, the way the bearishness here, we knew that there are more selling orders up here to come and mitigate. Price finally made its way back up here after we saw the break of structure here, right? So let's go down to the 4-hour and we can refine this order block a little bit more. And this is the way I would do it, right to this point, right? Right to the edge. All right, take it to the edge, right? I can take it to that edge here, right? And we can go on the way down and call this a 4-hour order block. And this is the way I normally mark them. Boom. Right. So price made its way up here, breaking structure along the way, taking liquidity along the way from these high points. This is a liquidity sweep here. All these high points have liquidity. People with stop losses here for who took shorts, and then those who were waiting for long breakouts, those were triggered. This is the way market makers work. All right. And we got these people who took shorts here, and we triggered the ones who were long. Boom. All right. The people who are long are in profit now, but that might change very soon. All right. So we're up here now making a double top inside of this 4-hour order block. So what are we to expect? Quite possibly price will reverse because of these selling orders that are still up here. We know that they are because of the way price sharply fell when it was mitigated the first time. All right, we just have an indication. All right, it's nothing written in stone, but those are the things that we look for. Now, if we go down to the 15-minute, we're going to see what are we looking for. We always, when price reaches your POI, your point of interest, you're always looking for price to a possible reverse, right? And see this arrow over here. This is actually a break of structure of this high, but there's also liquidity up here to get, and price made sure it came high enough to get that liquidity. Okay, and it starts to form a higher, lower situation over here. And this is what I look for reversals. All right. So on the 15-minute, it gives this broken up not so nice looking, what do you call it, pattern before the Asian session starts, right? Just yesterday. I'm not looking at that. All right. I'm not even looking at that pattern because of the hour. All right. Asia session, we do a lot of sideways action all the way till uh, um, London session, right? Got a little burst there to the upside, and then price comes back down, mitigates this bullish order block, and then starts to go up. We break that high. All right. We break that high. We come back. We retrace, and again, we find some bullishness once New York session opened at 8 o'clock Eastern Standard. All right. The US session, more commonly known. All right. And then what do we see? Come 9:30, this is when all of this starts happening. Big giant dojis, right? But we see the rejection. We see that rejection up there, and you can see it very clearly on the 5 minute. You can see it very clearly. It makes a bearish engulfer here. All right. And you look for price to break that low to complete this bearish engulfer, to validate it, to validate it as a bearish order block. All right. Price does go down there. Price does break, and it goes lower than this low. That's what we were looking for. Because why? That's a break of structure. And when you break structure, what are you looking for? A return to impulse. But what happens is price did climb back up higher, and we beat that high. All right. Now my antenna is up. We beat a bearish engulfer. We broke that bearish engulfer. Right. And that would make me think either of two things. One, we came for the price came for the liquidity. Two, that price may continue higher. All right. After breaking this structure, we're going to be looking for a return to impulse, which would be this last bearish move before the up move, right? We're going to look for price to come back and test this. If price breaks that low, then what we have here is a situation, a break of structure to the downside, and we can look forward to more price action to the downside, more bearishness, and that would mean this order block has we picked up those selling orders and we're on our way down. All right, so price does make it down here to test this order block, right? To test this bullish order block here. All right, and we didn't break it. We came down, but we did not break it. So now we're just watching. We're laying patient. We have a leg of structure that came down past this close. All right, not past the extent of the wick, but down past this close. When you see a long leg of structure like this, what you're looking for is discount or premium pricing. Premium pricing is for retailers. That's for losers. Okay, you don't want to pay premium price. You want to pay discount prices. That's what liquidators, uh, well, that's what hedge funds and institutions are looking for. The discount price before they make a big move. All right, and how do you measure? How do you gather that discount price? Well, what you want to use to help is your Fibonacci. You take it from the high to the low, and you go to the 50% mark. Anything below that 50% mark is premium price. All right. That's not where you want to take a short from. Okay. You want to take your short from up here. All right. This is discount price. This is the 50% mark is equilibrium, where there's an equal number of buyers and sellers. All right. What you want is anything above that that equilibrium. You want the discount price up here. And we made it up to the 61. All right. That's great. This is a great place to look for an order block. All right. And you can see that order block a little more clearly on the 3 minute. All right. This is from the 3 minute. And you saw that you would have it marked, you know, here you would have the head mark and you would have this one marked because this is pretty high up uh, uh, in regards to this leg of structure. So when price comes back here, I'm looking for a possible reversal. and I'm looking on the 1 minute time frame. And you can see how much time Price, it's not a soda, price spent here. So when it came over here, I'm looking for, uh, it chopped up, it chopped up, it chopped up. And then when it started to come on down, I was like, that looks like a short. Price did continue down. We did break this, this swing low. Okay. We broke that down. This didn't break that low. So we were still bullish up until this point. All right. But when price turns around here, at this order block, once it starts honoring bearish order blocks, you start to look for, is it going to honor more bearish order blocks? So we're breaking short-term lows on the way down, and we're like, we're getting lots of bearishness here, and we're cognizant of what time it is. We're after the open of the New York Stock Exchange, which was over here, and price usually either continues up or continues down, or pulls back. There's something. The second half of the New York session tends to go the other way. Tends to, but anyway, that's not a hard and fast rule. It's just an observation. So price continued down, and what do we expect? All right, what are we expecting now? Let's go back to the 5 so we can see this, the 15 so we can see this a little clearly. Price broke these lows here. All right, that's what we want to mark, and this is why you're looking at this video now. All right, this is why I got you looking at this video now. Why did it go all the way up there? All right, price broke this low point. All right, before this up move, price broke this down, and we were on our way to return to impulse. What impulse are we going to return to? This looks like a likely candidate. Look how strong it came from here. All right, and this looks very much like a retracement. So what are we going to do? We're going to measure for what? Premium under 50% or discount. We want a discount, right? And if price makes it back up to this order block, that's going to give us a nice discount. I always use the wicks. I take mine from the wick, from wick to wick. Some people will go wick to body. I will do that sometimes, depending on how big the body is. If it's a small body, I usually go to wick to wick. All right, but I wait until it enters my space, and I'm cognizant of the beginning of the body where it opened. I'm cognizant of it, but this is the line it crosses. It's like a boundary line for me. All right, and what you want to see on the lower time frames is price start to round over and fall again. This looks like a correction. All right, all we're doing is forming a bear flag, in my opinion, and we should see some more downside. All right, and that's what I wanted to share with you. All right, I'm hoping that you gain something from this. This thing is driving me crazy. I hope you gain something from this. How to spot the uh, the intention of what price is going to do. All right, and each time frame has a different intention. We go off of the intention of the higher time frames. When we come down to the smaller time frames, the higher time frames dictate what the smaller time frames are going to do, and that's why you set your POIs in the higher time frames. All right, we set this POI here. This is a 4-hour order block. All right, we looked for price to transition. It gave us a reversal pattern. It broke structure to the downside, and we're looking for price to come back up as a return to impulse. All right, and possibly continue with the bearish momentum. Darn it. I'm sorry. So I want you to be careful of something, though. When it comes to return to impulse, this one looks like a likely candidate because of the way price broke these lows. This one is going to be a pretty strong candidate. there's a possibility that it could come all the way up here. All right. If it breaks this one. So if it does break this high, all right, look forward to maybe be honored by this one. Okay. But I'm pretty sure we're going to get a reaction here, and we're very close to it. And I'm hoping that the word is getting out to you in a timely fashion. Make sure you drop a comment. All right. I need comments. I like likes. And if you like what I'm doing, give me a like. It encourages me to continue to put out free information. All right. And more information. I really like your feedback though, so I can improve on the next videos. I'll see you in the next one.